Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. We're into the 12th consecutive day now. The Australian dollar remains range bound. However, the broader assessment is still negative. The reason behind that is the RSI still remains under the midway point and is declining. And also backing up that view is the MACD as it also slips slightly further. And keeping an eye on the MAC signal as well, MAC line, and also the signal, because if these two lines penetrate the zero axis, then that should reinforce at least a potential downside challenge to the level of 76, 60, 90, where the bulls are likely to be camped out. And also I do anticipate a little bit of profit taking. Nevertheless, if this pattern is somewhat a shoulder, head and shoulder, then also the break of this support line, it's around 76.90, but I'm allowing a little bit of slippage because prior to the challenges to the downside, there has been a little bit of bullish response as we got closer to that 76.60 level. Nevertheless, both levels go. The measured move is down towards 75.20.25 as an objective. Well, as we close into the week, you can see that the euro has rejected the level of 122.60 and now looking back to the trend line, which is somewhere around 121.65.75 with a heavy RSI as it breaks through the midway point and also with the MACD holding to a weak negative signal, and also the rebound of the US dollar index, which measures the greenback strength against a basket of 6 major currencies, and the euro is weighted at 57.6, is the fact is that we can see a further slide in, that is, we break the trend. I do believe the market has potential to fall towards 119.90 and reassess if the dollar can strengthen. The risk to the upside for dollar yen has come back into play and looking towards this level of 109.90 to 110.10. I do anticipate the market hasn't probably got the potential to break beyond there, as it previously showed a very strong candle back in early May and gave it all back, but it did take a few days to actually unwind the strength. However, let's see if the bears do defend this level once again and then therefore look back towards 108.45 as support. The market was a little bit rattled in the UK after one of the MPCs, which is out of the Bank of England's members, said that we could see some potential rate hikes in around 2022. Therefore, the pound found a bit of strength. Nevertheless, the technical implications weren't that concerned in terms of the move with this strong candle. Didn't break above the level of 142.25.45 or around that area and still acting as a short-term cap. If so, then the market should ease back towards the bottom side of the range at 140 and reassess from there. With the rally in dollar yen and with the rally in sterling, the market has actually seen a bit more of a play to the upside to this cross-currency sterling yen. I feel there could be a bull trap in play and therefore just see this last move up as a slight overreaction to the two movements of the two legs. Let's see if the market can close back under 155. If so, it would reinstate the downside to 153, figure 40. Looking at gold, well, there is two dojis in play. And that's a little bit concerning because the fact is the market couldn't capture that top side around 1,900 to 1,918 objective, which is where I felt the market will probably take a pause or a breather, and it's done exactly that. Now looking at the technical implications, they are breaking down, and I view that the market may actually pull back to somewhere around 1,860.65 if the dollar does increase to a slightly bullish case. So therefore, I wouldn't be holding long positions up here as this pattern starts to unwind. Finishing off with oil, well, we've got a little doji coming into play today, but nevertheless, the market is still likely to be capped around this 67, figure 80, which was the high, as you can see here, back in March. If so, the rejection from there could see a pullback towards this trend around $64.30 30, or maybe around a little bit to about 63.5, because the technicals, especially to the MACD, is a little bit weak. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the new weekend.